Industries. Brijesh Bhatia of IndiaNivesh Securities is joining us right now. Along with him, we've got Dharmesh Kant of IndiaNivesh Securities too. Gentlemen, good afternoon to the both of you. I just quickly want to get in, Brijesh, first on the technical levels and then talk about some fundamental aspects as well with Dharmesh. But what would you do, Brijesh? We are already off 200 points from Friday's close. What would you do now? 110 odd points. Would you sell further?
I would take a contra bet going long at current levels for a couple of reasons. First, if you look at the structure, Nifty has formed the bullish shark, and we have seen rally of around 200-250 points from the lower levels. Second, if I look at the momentum from the lows to highs and the recent today's fall, it is just at 50% retracements. I think at 50% retracements, it plays out to be a key support zone. Third, if I look at 11,000, it's a key psychological levels on the charts or on the trading side. And fourth, if I look at the OI structure 11,000 is indicating a strong support. We have seen a huge put writing on the weekly expiry, and also if you look at the 29th August, which is the monthly expiry, there 11,000 put has been holding the highest OI. So I think 11,980, 10,980, 11,000 will act as a key support zone. So I would initiate a fresh long over here, keeping a short stop loss of around 10,955, and from a trading side, I am expecting back to around 11,130 levels on the upside. Even you can look at for the August series till 10,840 is not breached. I think possible test of around 10,230, 11,230, 11,270 can be on cards in August series as well.
Let's talk stocks then quickly, Brijesh. What are the stocks you're recommending this afternoon?
I'm recommending one long and one short. First, the long is on ACC. If you look at the stock, it's been slightly consolidating in the range of 1600, 1500 for quite some time, and hovering around its 200 days average. If you look at the current prices around 1150, it is being trading right at 200 days average, which is around 1549. So one can initiate a long bet at current level, keeping a target of 1640, and upside stop loss could be placed at around 1510, and 1640 is the upside target. Second is a short on Kotak Mahindra Bank. If you look at the stock for last 2-3 days, it is being resisting around 1530, 1535 marks, and we have seen continuous selling pressure coming around those levels when prices test around these range. So even if you look at the Friday session and Thursday session, even in today's session, we have seen the similar formation at around 1530 levels. So I think one can look for short opportunity around 1520, 1522, keeping a target of 1475 on the downside, and stop loss can be placed at around 1540.
Okay, so those are some stock-specific ideas coming from Brijesh. One buy call on ACC and a sell call on Kotak Mahindra Bank. But the markets are not looking great at all, below the 11,000 mark, and a sharper sell-off seen for the banking stocks today. Let's bring in our fundamental guest then. Dharmesh Kant of IndiaNivesh Securities joins us on the show now. Hi Dharmesh, good afternoon. Today's fall is led by what we've seen happening in the markets globally, and now the trade war seems to be shifting towards the currency war, which will never be a great sign for equities worldwide. How are you reading this development, and what should one do in the markets now?
Yeah, good afternoon. Yeah, definitely not, because currency war is something which led to 98 collapse of the Asian financial crisis. But look at the 10-year government bond yields; they have crashed to around 1.67. So almost 40% kind of fall has already happened just before the 20 basis point rate cut was in Fed. So things are looking very, very murkier on the global scenario. Be it dialogues between US and China, or the slowdown in the economy. And I think it's just the beginning of the correction which we have seen. This was the first leg of the correction which went by, and now we are getting into the second leg of the correction before some consolidation happens. So things remains to be bad. And domestically also, if you look at the top 200 market cap companies, they have not reported any significant numbers. So all the numbers they have reported is single-digit profit growth. At the same time, the commentary has been equally very negative. So there is nothing to support. Only two factors which can support this market as of now. One is the monsoons have recovered, and second is the fall in the crude oil prices. So these are the two comforting macro factors for India which can provide a flow to the market. Other than that, if this rupee is already trading above 71 now. If it goes beyond 72 or 72 and a half, it will be a further pain for the economy. So I do think we are more legs to go down than to go up, purely from trading perspective.
Dharmesh, even the positives are not creating any sort of tailwind. As you rightly mentioned, Brent crude, which entered into bear territory last week, still no respite seen for the equities because of the currency war now, which has begun. One bright spot in today's market, Dharmesh, and that's Reliance Industries. Do you think the deleveraging move that the company has announced in its annual general meeting yesterday, the response to the stock is far-fetched, or do you see this move will last in the long run now?
No, this move is going to last in the long run. See, the one good part about Reliance is whatever they say they do. So this is what they have a track record. Earlier also, whenever they have announced something or whenever they have laid out a business plan, they have executed that and they have executed it successfully. So there's not even a single failure as far as Reliance is concerned, Reliance Industries per se. So I do think the announcement which was made, and it's a very far-fetching long-term return kind of an environment. So by 2021, if it is going to be debt-free, 30 rupees would be the EPS which will come just on account of interest cost saving on the Reliance Group. So that itself, if you give it a 15 kind of a PE multiple, it's 450 rupees on the stock price. So I do think the value unlocking of retail and the Jio thing is about to happen. That has not happened as of now, and this is a stock which needs to be lapped up by investor on every correction. My own sense and calculation says that by FY21, the earnings of Reliance, the EPS would be around 125 to 130. So 1800 is the target price we are working on. And this is one of the safe and surer bets if somebody wants to buy. For weak-hearted people, they may not be buying today because the stock is up significantly in a falling market. But if you get a chance to buy it, say around 1100, 1150 kind of a 5-7% correction from here, one should be buying this. This is a must portfolio buy going forward for next couple of years.
While obviously this definitely has a feature in long-term portfolios, from a trader standpoint, Brijesh, it's already run up 10% today. Last 2 days, Thursday and Friday of last week itself, the stock has seen almost a 5% move already, so accumulate a 15% move. Is it run up too fast, too soon? So, traders technically missing the bus?
No, not exactly. So if I just look at the Reliance, it generally has the habit of gapping up and then retesting the gap and resuming its upward journey. So as of now, I think at around 1280, it might slightly dip towards 1240, 1235 zone to retest its gap, and then new fresh journey might see. So I think dip can be on cards, and one can accumulate around those levels between 1240, 1245, and again look for a 1350, 1370 on the upside.
Any which ways, there are pretty aggressive targets on Reliance Industries post their AGM. So I think the CLS has got, I think, one of the most aggressive targets of about 1530 on the stock price. It's already closer to 1284. Should actually pull up the ANR function of Reliance Industries now to just, get in a sense of whether or not most of those updates have been factored in and what exactly is the potential upside now for the stock right now. So the ANR function will give you a better idea. So you still have a return potential of another 10% because you've got most of the target prices being up now to about 1412. That's the average that we've been seeing, and most of them have held on to their calls. Just a few overweights that have come in after yesterday's announcement. But individual stocks, we've been talking about 10 networks, Hathway, or double-digit gains coming into them. Gen Irrigation is up about 8% today. Jaycop is up another 10%, and Indiabulls Housing 10% higher in today's session. So extremely volatile on the stock. Big swings on an intraday basis is what you can expect from Indiabulls Housing Finance. Dharmesh, from most of the companies, and particularly Indiabulls Housing Finance, what would the idea be now? Would it be to start investing at these levels, or just still there is still more ambiguity left? So you would rather just save up on that money and invest someplace else?
No, there are too many ambiguities left out there as far as Indiabulls Housing is concerned. And if one wants to invest in housing finance companies, there are better options available. So the mud which was thrown on Indiabulls Housing post that sting operation or whatever the reports were. So those reports does have some merit. It's not that it's completely out of the way. And I think it will take some time before the company comes clean on the entire financials which they have. So I mean, if you go by the numbers which they reported in Q1, was horrible sort of a numbers, and if the things were going good and great, that's kind of a disappointment should not have been there first in the first case itself. So I would suggest to avoid Indiabulls Housing as a firm. Let the stock jump 10-12%. It can happen. But if it really wants to go into a housing finance company and with a lower interest rate regime and a boost on the low cost housing, I think LIC Housing Finance or Canfin Homes provides a much better opportunity at current levels and the current valuation. So they are a better bet as of now. Indiabulls Group should be avoided completely in my own. That's my sense on the group.
Okay, avoid Indiabulls Housing. The stock's up for the second straight day. Remember, but last week, one of the days, it also fell quite sharply, 13 to 14%. A short covering bounce seen on Friday, and today as well, we've seen a bounce back of about 10%. Let's address some more earnings. NCC reported a decline in both its revenue as well as the bottom line in the June quarter due to weak execution. To make things worse, cancellation of previously awarded projects in Andhra Pradesh is expected to impact earnings materially for the entire financial year, according to some brokerages. To discuss the quarter gone by and the outlook for the rest of the year, let's welcome in Mr. Y.D. Murthy, Executive Vice President Finance at the company. Hi, Mr. Murthy. Good afternoon, and thanks a lot for joining us today on Bloomberg Quint. It's not been a great quarter for your company, owing to the decline in the execution which we've seen in the quarter gone by. Tell us, is this trend going to continue, or the situation is looking better in the current quarter?
Yeah, in the first quarter, our turnovers were impacted mainly because of the elections, the general election in the month of May across the country and also in some states. So in the month of April and May, the execution was disturbed to some extent, mainly because the payment cycle was also impacted from the state governments and some of the central government agencies. But we believe it is only temporary in nature. First quarter, we have reported about 7% less growth compared to first quarter of the previous year. But going forward, things will definitely improve. And a lot of order accretion is also expected in the current year. We are targeting a top line of around 11,000 crores for FY20 and an order accretion of about 14,500 crores for FY20. And based on the new government that has come to power at the center and in the various states, the physical infrastructure development across the country is likely to continue, and the huge order accretion is expected to companies like us. So the first quarter was a blip in the journey of the company in the current financial year. We are fully geared to see that the turnovers and profit margins are achieved for the current year at par with FY19.
So you're suggesting the growth in the top line in the first quarter did not happen because of the elections. Tell us, what is the ground situation then now? Has the execution picked up in the second quarter? Are you going to return back to normalcy?
Yeah, it is picking up. But again, there is a question mark in Andhra Pradesh because some contracts were cancelled by the new government there, and some contracts are under scrutiny, and they formed a committee to look into those contracts and the bidding process, and that may take some time. They got about 45 days time for completing that work, and after that the works are likely to resume in Andhra Pradesh. And other than AP, rest of the country we don't have any problem. All the projects are going on quite smoothly. We are doing some of the marquee projects, like we are doing the MSRDC Nagpur-Mumbai Expressway, about 2,850 crores, which is going on pretty well, and it is likely to contribute substantially to the top line in FY20. And also we are doing projects like Lucknow Airport, Patna Airport, and also medical campuses for All India Institute of Medical Sciences at various places. All these things are likely to contribute substantially to the top line in the coming quarters.
Mr. Murthy, tell us what's the total value of the orders in the state of Andhra Pradesh where there has been some cancellation of the projects which were previously awarded to you?
Yeah, we have got the Chief Secretary notification saying that projects awarded on or before April 2019 and where the work has not commenced, they stand cancelled, not only for us, for all the contractors in the state of Andhra Pradesh. As far as NCC is concerned, in that category, we have about 6,100 crores of orders are there. But the point here is we started the year with an order book of about 41,000 crores, and out of that 6,100, some projects cancellations we have received, about 3,800 to 4,000, balance are yet to come. Assuming all the 6,100 stand cancelled, our order book will come down to something like 35,000 crores. That is a very substantially large order book, even at the beginning of the year. And added to that, the new orders that are likely to come to us in FY20, something like 14,000 crores. So we have got enough order book on table to take care of the targeted turnover in FY20.
Okay, fair enough. So you're suggesting that total exposure to Andhra Pradesh order book was nearly 6,100, out of which 3,800 has been already declared cancelled and the rest is under consideration. Give us a sense then. I think you won almost 636 crore worth of orders in Q1. What's the current status in the second quarter? Have you won any orders so far?
Yeah, the first quarter order acquisition also was a bit sluggish, mainly because of the elections, mainly because all the government agencies were busy with the elections and the tendering process did not take place. Particularly in the month of April and May, there was no order acquisition as far as NCC is concerned. But in the second quarter, order acquisition is likely to pick up. In the month of July, we have already reported about 500 crores of orders have been received. Some more orders are expected in the month of August, where we have become L1, but the letter of intent from the client is yet to be received. So order front, we are doing well, and that will continue. Particularly the governments are giving a lot of importance to development of physical infrastructure across the country. And we are a frontline company, and we are nicely positioned to capture those orders.
Murthy, one last question before we let you go. You spoke about your outlook on your order book positions. Could you break that down for us, particularly with regards to the expressway projects and what stages of tendering are they in? Your civil construction opportunities, how big are they? With regards to affordable housing under the PMAY, how big is that? And also the fact that the government is now starting to push towards water transport, distribution and storage, which is one of your core capabilities. How much of a kicker is that expected to be for you?
Yeah, see, all these three verticals that you have mentioned, buildings, roads and water pipelines, together constitute for us in NCC about 75 to 80% of the order book. And we have got a leadership position in all these verticals. And because of that, we are able to get substantial orders across the country in various states. Now we are an all-India company and we operate in about 27, 28 states. And we have got a decentralized structure of bidding for projects, and that gives us the speed that is required to take care of the emerging opportunities in various parts of the country. So all these measures are definitely going to give us substantial order acquisition in the current year.
All right. How much would you expect from expressways, just because that's one of the largest chunk?
See, we are doing right now the MSRDC road project, about 2,850 crores are given to us. And also we are doing some capital city road projects in Amaravati, where the work has been halted for the time being. But we are looking at other expressways that are likely to come up in UP and elsewhere. And we will be definitely participating where we have got a leadership position as far as the expressways are concerned.
Got that. Mr. Murthy, thanks very much. Really appreciate you taking out the time this afternoon. Mr. Vaidi Murthy there of NCC. Obviously, not what they have lost out in AP, but their ability to take on more orders so that the order execution improves through the next part of the year, which will give their earnings a bigger fillip. That is something that the street is more interested to know. NCC, though, the stock on the back of its results now has been down about 6.5% at about 64. Most of these construction majors, how do you view them, Dharmesh?
See, I think this is not the right time to go into them because all these companies are good, but when they only worry about the construction majors as of now, that includes even L&T, they won't be getting to execute orders in a speedier way this year because the disbursals will be delayed and then the approvals will come delayed because of the fiscal challenge which the government is facing. This slowdown which we are seeing right now will have a compounding impact on the revenue of the government because the taxes won't come that great and that will have a slowdown on the infra spending of the government, and that is where the challenge will lie. So my own sense is this quarter, I mean the Q2, you will get fair amount of opportunity to buy them at much lower levels, be it L&T or NCC. These are the top two picks from the construction major basket, and NCC have done all the hard work. They have turned around the balance sheet, they have brought down the debt level, they have improved their operational efficiency, they have plugged the loopholes. So all those things have been done. But I think timing as of now does suggest that 5 to 7% kind of a correction can be there on each of the stock prices, and once they are there, that is the right time to start cherry picking out there. So L&T and NCC both are good buys, but wait for some time before entering them. Let's have the fiscal maths of government more clear by end of Q2 maybe.
Okay, that's the view coming in on construction players. Just for now, focus on the markets. We are at day's low, 10,950, which we were talking about as per the options data. That level has been breached now. 10,944 is where the index currently trades. It's a cut of about 165 points. Just for the benefit of our viewers, the recent low is about 10,782, which was seen last week. So probably that's the next support level that you can watch out on the Nifty. Both Nifty, Bank Nifty once again have been trading below their 200-day moving average. Bank Nifty is down about 2.5%. I also want to pull up India Volatility Index that spiked nearly 10 to 11% in trade, I believe. Yep, it's above the mark of 17 right now, 17.5. Most of your sectoral indices are trading in the negative territory. Of course, the banks are the ones which are leading the laggards. So Nifty, Bank, PSU banking, private banking have seen cuts of between 2.5%. FMCG is down 2%. IT, TCS, Infosys may not be lending support to the markets today. Metals continues to reel under pressure. That too has seen cuts of about 1%. So it's selling across the board that we are seeing today. Brijesh, a view on Bharti Airtel as well, which has reacted negatively today right from the word go in the morning. How are you reading the charts of that stock?
Before starting on Bharti, I think I have given a long call on Nifty, which has been stopped out at around 955. So in case the viewers have taken long, I would suggest to exit on the short-term basis. Coming on to the Bharti Airtel, I think if you look at the last 6 months performance, stock was majorly trading between 340, 295 for quite some time, and we have seen stock breaking out those range. I think 340 will now act a major support because it was nearly 3 months of trading where 340 was acting as a resistance zone. So now the resistance might turn out to be a very, very strong support. So in case stocks take a halt at around 340, 345 and shows a sign of reversal, I think it would be a good bet to go long on Bharti around those levels. But at current level, I think wait for another couple of % more how the stocks rate in the 345 zone, then take a trade around those levels.
I want to just look at M&M. While we've been talking about how most of the auto companies are trading at about 2.5 year lows, Mahindra & Mahindra is probably at these levels. The last time we saw it at around 515 odd was in April of 2014. So it's more than a 5-year low for Mahindra & Mahindra, and that's quite telling for the stock, which used to historically in the last year or so take multiple supports at a level of about 550. This time around, that has been breached in a big way, and there is no floor to this downside on the stock, at least least for now. And today's session also proves that about 514 volumes have picked up, about 3 million shares have been traded, and it's it's just the stock at one point, the way it was trading with the rest of the pack clearly shows the kind of negative sentiment that's enveloped Mahindra and Mahindra, and the prospects of the stock doing well in the future with regards to its overall earnings picking up. But a quick view, Brijesh Bhatia on Mahindra and Mahindra, 550, multiple support levels in the recent past, broken below that, almost a 5-year low for the counter.
Yeah, definitely auto space is in the downtrend and M&M is no left in the downtrend. I think 446 is the level I'm eyeing on the stock. So if I just look at the stock tendency to move, it falls around 140, 150 points, then consolidate in a range of around 3-6 months. If you look at the similar 700 and 600, since Feb it was being trading in those range, and now we have seen 600 being breached. So I think next target is around 446. So if I just look at the 161% of that fall comes to around 445, 446 level. So that is the level I'm target, and every rise from around 534 could be a short opportunity on it.
Okay, Mahindra and Mahindra trading at 5-year low, not good times for the entire auto space. We've seen sell-off coming up for the entire space, be it Auto Ank or the OEMs. Let's move on. HDFC Mutual Fund increased stake in oil marketing companies while decreasing stake in banks and NBFCs. Yash Upadhyay gives us a wrap of all that HDFC Mutual Fund bought and sold in the last month. Yash.
Let's directly go straight to which are the stocks wherein HDFC AMC has increased their holding, and there isn't a clear trend, but what we pick up from the numbers is that many of the Nifty companies there, they have managed to increase their stake in the previous month, and that plate should come up as well on your screen. ITC is right at the top, wherein they have bought an additional 3 crore shares in the previous month, along with a bit of the OMCs somewhere lower in the pack. HPCL as well as BPCL, they managed to buy more than 50 lakh shares in the previous month, along with Power Grid, BEL as well as Coal India featuring in this list. So a bit of the OMC and PSU stocks had found buying interest from HDFC AMC in the month of July. But on the other hand, there is a mixed trend again that we are picking up, but a lot of the Nifty names, they feature in the list of stocks wherein they have reduced their holding, including the likes of GAIL, UPL, SBI as well as ICICI Bank. A completely divergent trend to what we saw with SBI Mutual Fund, wherein they had increased their holding in the financial names. We've seen some of the selling coming in. Shriram Transport is another name from the financial pack, wherein they have sold some amount of shares in the previous month. On the other hand, there were no new buys in the month of July, but a handful of sell-offs. We'll start first with the like of Bharat Financial, when they have sold close to around 5 lakh shares in the month of July. And on the other hand, we've seen selling come into IDBI Bank as well as Colgate, only about 11,000 shares there, and an additional 3 lakh shares in IDBI Bank. So these are the 3 names which go out completely from their portfolio.
All right, on to a Bloomberg News exclusive. Amazon may be close to buying a 10% stake in Future Retail. The world's largest online retailer has been in talks with the Kishore Biani promoter company for some time now. Ari Alster also joins us now with this exclusive. Ari, thanks very much for taking out the time. I think the last time we spoke about this was sometime in November, when the talks were slightly more ripe. There were talks of about almost 2,000 odd crores coming in via this deal for the Future Retail Group. Tell us what you've got.
Right. Well, basically those talks that we last heard about in November, they've sort of been dragging on and off as the two parties have tried to figure out how they could make a potential deal work under the government's new e-commerce policy. And it seems that they're finally getting close. The exact number, all the numbers aren't exactly clear yet in terms of how much money and the size of the stake. But we are hearing that it could be as much as 10% of Future Retail for about, as you said, 2,000 crore. Although these details are still subject to change, but what is clear is that the companies are in discussions with intent to do a deal.
All right.
And
all right.
sorry, I've lost the earpiece.
No, we got your point, Ari. Thanks very much for that. So that is the Bloomberg News exclusive there. Very close to acquiring that 10% stake in Future Retail. The last time, like I said, in November when this came about, there were talks of closer to about 2,000 odd crores. That's the size of the deal that was going to be executed under the foreign portfolio investor route. But this is probably going to be, if this actually culminates, this is going to be the third investment that Amazon is going to be making. They already hold a part in Shoppers Stop. In September last year, they had Witzig Advisory Services. They had co-invested in the company, and now there are talks with Future Retail. So watch out for that one. The stock's in focus right now. Other than that, for the markets now down 1.6%. The Nifty 50 collapsing pretty quickly. 183 is where it's currently trading. Lower by 183 points is where it's currently trading at. Dharmesh Kant, thanks very much for joining us this afternoon. Really appreciate you taking out the time and sharing your thoughts with us right here on the show. But while we were talking about the swift pace of declines on the index, I'm sure there are a few stocks which still make those headlines in terms of gains. And which are those Fab 4 stocks? Mishika Parak, she's joining in right now with the details of that. Mishika, good afternoon.
Good afternoon, Devina. First on my list of Fab 4 today is Godfrey Phillips. The stock is gained on the back of very good quarterly numbers. Their revenues are up 40%, both net profit and EBITDA is up 2 times, mainly on account of high revenues, 42% higher revenues in cigarettes. Second on my list is Reliance Nippon. The stock touches a fresh 52-week high and has gained the most in 2 months. Stock number 3 is Century Ply. CLSA upgrades its recommendation of the stock to buy from sell and hikes target price to 168 rupees from 159 rupees, which implies a 25% gain. Last on my list is Narayan Hrudayalaya. The stock has gained for the 5th consecutive trading session with volumes trading at 30 times its 20-day average. Back to you, Devina.
All right, Mishika, thanks very much for that. So those are the Fab 4 stocks of the day. You still have a few bright spots even in a falling market. But bringing in Rahul Mohinder of Veritek Software, he's joining us right now. Rahul, what would you do? We're down almost 200 points on the index.
Good afternoon. Well, I continue to be negative